We have some green on the screen in North America to start the trading year. A triple-digit gain on the Dow. Not too bad. What's going on? Why all the enthusiasm? Joined now by Scott Bauer, the CEO of Prosper Trading Academy, for a little bit of insight. Good to see you, Scott.
Great to be here, and Happy New Year to you.
Happy New Year to you. So what's going on here? Is this Chinese liquidity making us feel pretty good about at least the first trading day of 2020?
You know, it's part Chinese liquidity, and it's also part the fact that there's nothing negative has happened between the U.S. and China over the last week, specifically over the last couple days. In fact, you know, we saw President Trump come out, say January 15th is that magic date. I don't know that that has been, signed off on yet by the Chinese, but, you know, everything's so good right now when you're talking about the tariffs, and really the market is just taking this all in as a big positive. They don't see the Fed doing anything, so rates are going to remain accommodative. And to me, the big question now moving forward, Greg, is what's going to happen in the starting in the next couple weeks with corporate earnings.
That will be very interesting now that we have the big macro themes. Hopefully, we get the signing on January 15th. It's only a phase one, but a bit of peace in the land on the trade front. We got an accommodative Fed that has our back. And so really we need to get down to the fundamentals. What are the companies showing us from quarter to quarter?
No doubt about it. That's really what it breaks down to when you try and, decipher through everything on top. But, it's going to be a little bit different this coming quarter because the last few quarters and maybe all of 2019, we saw lowered expectation, lowered guidance, so the metrics, the barometer was pretty low for corporate earnings. And I think that the landscape has changed quite a bit. And now, a lot of these companies, like you just said, they're going to have to really show some meat. They're going to have to show that, yes, what's happening in the market and what's happening in the economy has transferred into good top line and bottom line numbers.
Yeah, because of course investors, when they take a look at 2019, if you're along the broader market, you're pretty happy. You made some nice change there, but then you start to get worried about 2020. What could trip us up? It's always a thing that we don't expect.
Sure. I mean, I think the big concern to me would be the consumer. I mean, the consumer really was, the largest tailwind to the economy, the largest tailwind to the market in 2019. So far, early results coming from holiday shopping and the retail space is that the consumer, did really hung in there and did really well. But if we start to see, some cracks in the consumer, that's going to be very concerning because we've already seen that in the manufacturing sector. Now, we may get a little bit of rebound there, but we've already seen it there. So the consumer has to remain strong. That, to me, outside of obviously any geopolitical risk, would be the biggest thing to worry about in 2020.
Now, I remember a time when I would host these shows and I would take a look at the VIX all the time, and the VIX was showing me something. It was dramatic. I haven't showed the audience the VIX in ages. So, I mean, is there going to be any volatility in this trade this year?
Well, that's the beauty of maybe staying long in this market right now, is that investors that want to stay long and want to stay in their positions, volatility is very, very cheap right now. So to protect positions, to protect investments does not cost a lot, relatively speaking. So that's been a great thing for investors, is that they can go in and they can buy some upside VIX calls, or even if they want to just go out to the S&P and buy some downside puts. It's been very, very cheap. I mean, we all want to shop for our insurance, right? We all want to get great rates on our car insurance and our home insurance, and you know what? Insurance in the marketplace now is pretty darn cheap.
When it comes to the second half of this year, we're going to get pretty intense when it comes to the presidential race. Maybe we'll even have a Democratic candidate. We'll know who's going up against Donald Trump. How much, volatility could we see in the trade then? I guess it really depends on who's showing in the polls and what their policy promises are.
No doubt about it. At least the early line is if you get an Elizabeth Warren or maybe a Bernie Sanders going up against President Trump, that really could lead to a lot more volatility, because the mindset is that if they were to win come November of 2020, there could be a big shift to the financial system and everything that the market has built up over the last few years. But that's a ways off right now, and I don't think people are thinking about that quite yet. However, once we get through that first quarter earnings, then it's going to be front and center, because then we're going to start getting all of the individual states' elections here, and we're going to get closer and closer to a Democratic nominee. So that's where volatility should pick up. It really should, going into the presidential elections.
Just had this headline, speaking of stocks and expecting decent things in 2020, Apple just fell a bit below, but it crossed $300 for the first time.
Yep.
What a year Apple had last year. It's a pretty good little piece of sentiment there for one of the big tech companies to have crossed this boundary.
Sure, it's a psychological number. Nonetheless, I mean, it is just a powerhouse. And what it's really showing is that tech is the space. It was all of 2019. It probably will continue to be for 2020 and beyond. And a company like Apple, man, oh man, you just, you look at that and say, what's next? Is it 400? Is it 500? I know those are very, very lofty numbers right now, especially coming off a year that we saw such incredible gains there. But, I don't see downside in the near future to this stock other than maybe some, a little bit of profit taking here and there.
A little bit of profit take, definitely at these levels. Some of the money managers I'm talking to getting interested, if not a little bit excited, about emerging markets this year. They're not saying they're rotating out of North America, but they're seeing opportunity. Do you think there's something going on there?
I think they're seeing opportunity because the whole global landscape, whether it's picking up or not, it may have bottomed out. I think, maybe the worst is behind us on the global landscape. So when you look at some of these emerging market areas, yeah, they've lagged. So it's probably a really good opportunity to maybe get some outperformance in some of those spaces.
Now, when I think about politics as well and heading into an election, you said that'll be a later issue, but for Donald Trump himself, I mean, the trade war was over what many have told us were very real concerns about how China had structured its trade relationships. At the same time, there was some political theater around it. Is there, I guess, a desire now that would be coming out of the White House to say, listen, we've had our war, we've had our theater, we've had our win, we're heading into an election, why don't we just cool it out on the trade front for a bit?
Well, you would think that cooler heads would prevail, but anything can happen. I mean, the ropes are off. Anything can really happen. And you know what? That's not Trump's way. It really isn't. So, even though at risk is the election, and everything that the White House should be pointing towards right now is the election in November 2020, I don't see any calming at all about that.
One thing President Trump has commented about before is obviously oil prices. And it plays well for a voter to say, hey, look, the price of oil is cheap. You're getting a bargain. Where do you see oil headed? Because we have a strange relationship with oil in this country. We want to see firm prices. We don't want to pay too much at the pumps, but we want to see firm prices because the energy industry is so important to our economy.
Absolutely. I don't think we're much different, quite frankly, with you. And I think this range that we've been in for pretty much most of 2019, outside of when we saw, $30 a barrel way back when, I think this range of 54, 55 in West Texas up to the current levels that we were just at, about 62, I don't really see us breaking out of there. I mean, we're at record output here. I know OPEC has cut back another 500,000 barrels a day, and that's supposed to, sit still until June, but I don't really see much of anything outside of that range. If anything, I would actually say there's some headwinds coming into the space and not tailwinds.
Scott, it's always great to get your insights. Thanks for joining us. Look forward to many chats this year.